growth looking like for the second half of this year amid the Q3 seasonality that businesses such as yours typically face?
Good morning. Very happy to be here after a while. We are very positive, very excited about the growth trajectory for Mindtree. If you look at our Q1 and Q2, both were approximately 19-20% YOY kind of growth. All the investments we've made over time across both the grow the business and run the business portfolio are yielding good results. So everything is fairly intact and fairly strong from the Mindtree perspective. And like you mentioned a few minutes ago, the demand environment in the marketplace is also quite strong. So overall, we are very positive, very confident of our growth for this year.
To hear that. So compared to other verticals, Rostow, BFSI has been relatively soft for you, as was seen in the last quarter too. And recently, tech companies in Europe are seeing weakness in BFSI as a segment. How do you see your BFSI pie doing? And do you think there can be a marked or significant improvement as we go along?
Not seeing that at the moment. If you sort of zoom out and look at our portfolio of clients across our 4 verticals, we see our technology clients, our travel clients, and our retail and CPG clients pushing the boundaries and doing the maximum amount of innovation, especially around digital. Within our portfolio, we are not seeing that with the rest of our BFSI clients. So I think even for the next 1 or 2 quarters, our verticals like retail, CPG, travel, and technology will do better than BFSI. We are seeing somewhat of a soft picture on BFSI, mainly because we are not seeing customers in that portfolio spending money on innovation. And for a player like Mindtree, whose primary sort of go-to-market approach is our strength on digital, therefore we are not seeing that much of a traction in our BFSI business.
Okay. How are you looking at the traction in 3 different pockets? Growth in the business, the change in the business model, and in running the business, essentially. You know, analysts are indicating that there would be portfolio challenges in running the business going forward. Is that the case?
Not within our portfolio. So if you look at our run the business kind of work, where we are helping our clients leverage technology to run their business more efficiently, areas like infrastructure management, testing, etc., we have a very differentiated value proposition, very platform-led, very non-linear, highly automated. So a completely different value proposition for that part of our business. So that's quite well for us. As of today, it's about half our portfolio. Approximately half our revenues come from digital and half come from run. So it's a fairly large chunk of our portfolio. Given the differentiated position we have, that's doing quite well. It's also more profitable for us given all the investments we have made in automation and non-linearity in that business, platformization of that business. So it's also high margin business for us. On the grow the business portfolio, slightly different approach, highest amount of investments both in technology and in domain. So some of the work that we are doing for the customers in this part are first in the industry for those industries. So we're not just doing something innovative for our client, but our client is actually pushing the boundary and doing something that nobody in their industry is doing. So we are building very referenceable case studies, very exciting partnerships. So we are attacking that in a completely different approach.
Okay, fair point. So what would you say could be the impact from Brexit for you? Because you earlier acquired a company called Bluefin, and that took a long time to show gradual improvement. How much business, if we could understand in greater detail, for you comes in from the UK region, and how susceptible would you be to Brexit?
So at this point of time, about 25% of our revenues come from Europe, and of that about 75% comes from the UK. So the UK is a very large market for us. So it'll be approximately 15-16% of Mindtree's revenue from the UK. At this point of time, it is a little bit of a confusing picture. I think till the time there's a clarity on the shape at which Brexit takes itself, and then obviously our clients will need to configure their businesses accordingly. So it is something that we are very conscious of, watching very closely, but difficult to make any kind of a prediction at the moment there. Coming to our Bluefin business, I think the challenges there were relatively more in terms of a cultural integration, etc., which became a little bit worse because we bought the business in July 2015, and immediately thereafter Brexit happened, and many clients obviously cancelled some of their projects or delayed some of their projects on the SAP world. But today, we believe with the amount of focus and expertise we have built on SAP, I think that business has also become fairly resilient. So I think that should do well. But on the overall UK portfolio, I think it's a wait and watch situation at the moment.
Right. Microsoft is your top client, Rostow, accounting for 20% of your sales and has been a key driver making up, more than 40% of your incremental growth last 2 years. Do you see a similar momentum continuing? I mean, clearly Microsoft is now the most valued company in the world, overtaking Apple. Would that translate into more business for you as well?
At this point of time, like I said, typically we don't comment on client-specific issues, but nonetheless, like you point out, it's been a high-growth opportunity for us. A lot of that growth has come because we have wonderful relationships and we have delivered excellent value for the customer. So as long as we continue to do that, as long as we maintain good relationships and deliver differentiated value, I'm sure there's enough growth available for us in the account.
Okay. Fair point. Just wanted to understand what's really going on when it comes to the currency as well, Rostow, because rupee has appreciated 5% in the last 2 months, and now ticking around that 70.5 odd level. How will this volatility change your EBITDA margin trajectory from 15.4% last quarter?
I think the changes in the rupee typically garner a lot more interest and attention from the media than it does for operating management like me. Our approach has been from the beginning of the year that we are focused on delivering improvements in margin on an operational basis. Anything that comes or goes because of currency is over and above that. So if you saw last quarter, we grew margins by a small amount operationally, and whatever came because of currency just flew through to the bottom line. So our communication consistently over the last few years has been the management team is focused on improving margins operationally, and anything that comes or goes because of currency is over and above that. Typically for us, a 1% change in the rupee is a between 35 to 40 basis points impact to margin. The only other comment that I think will be useful for your viewers is that there are two facts that we need to keep in mind when you look at the impact of currency. One is the average rate in the quarter, which is how does the rupee behave day to day during the course of the quarter. But secondly, a lot of the accounting also depends on the closing rate on the last working day of the quarter. So the combination of these two will lead to the final impact on the bottom line for this year, for this quarter.